There's some headlines you read and you wonder if someone is pranking you, like this one. ChatGPT can pick stocks better than your fund manager. I guess maybe it shouldn't be so surprising now. The adoption of ChatGPT is growing exponentially. People are using it for everything from writing emails to building recipes to workout regimen. So why shouldn't stock picks be one of its uses? When I first read it, I thought it sounded totally crazy, but you don't know if it's crazy until you actually test it out yourself. So that's what I set out to do here. I not only cared about what stocks it picked, but I wanted to see how it thinks. Can it truly replace a fund manager? Let's dive in. So the first question I asked it was to find the best stocks to buy right now. And it came back with some picks as of April 29th, about 9:30 p.m. The first thing I noticed that it grouped the stocks into some very generic buckets, like top analyst picks, Buffett-backed stocks, value opportunities, growth stocks to watch, defensive dividend picks, undervalued gems. Okay, if I wanted those generic buckets, I probably could have just typed in a search into Google and come up with the list of names. The stocks it picks were just as generic as the bucket that it picked as well. So that led me to a key insight. When you give ChatGPT generic prompts, it gives you generic lists. And generic lists means that we're just investing in the same things that everyone else is investing in. So how do we find picks that the herd hasn't picked over yet? The answer is to use more specific prompts. Like this one. Prioritize companies with revenue and growth above 10% and low debt over 5 years. And the picks start to get a little more interesting. Here they are. Nvidia, Taiwan Semiconductor Manufacturing, Netflix, and then Rolls-Royce, Sterling Infrastructure. These are some names that I haven't even heard of yet. But there's still a problem here. Past performance isn't a predictor of future success. ChatGPT is leveraging information that it has about past performance of these individual stocks and using that information to analyze what the stocks would do in the future. So how do we use ChatGPT to help predict future performance of a company? We do that by looking at 5 key areas. The first is to look at the macro environment that we're in. Here's a prompt that you can use for it. This prompt allows you to evaluate the macro environment and its indicators like interest rates, inflation trends, GDP growth, and you can ask it specifically how it impacts the stock that you are evaluating. Tell it to look at revenue streams, cost structures, and its industry position. The second is to look at news sentiment surrounding the stock and how it could impact its performance going forward. Here's a prompt that you can use for that. You can ask ChatGPT to summarize the current news events associated with the stock and how that impacts its performance going forward. Is it good or is it bad? You can make your own decision based on the analysis that it provides you. Third, you can incorporate the earnings forecasts and ask it to think about how that forecast aligns with the macro environment and the news sentiment. Will the earnings forecast be impacted by those news trends and macro environmental indicators? Fourth, you can ask it to conduct a scenario analysis based on the different indicators that we've walked through. So if inflation goes up, what's the impact on the stock? If inflation goes down, what's the impact on the stock? From its revenue streams to its expenses and its competitive position. You can use this prompt below to make that evaluation. And lastly, you can ask ChatGPT for a sensitivity analysis of the key financial metrics of the business. So how do raw material costs, labor expenses, and exchange rates impact the company's net income? All right, now that we've put all of these together, here are the 3 stocks that ChatGPT recommends we invest in. So this first one is one that I had not heard about until ChatGPT recommended it to me, and it's Sterling Infrastructure, but it kind of makes sense now that I've learned a little bit about it. So it's a business that's focused on the infrastructure segment, and it does work in 3 main areas. One is the infrastructure segment, which focuses on large-scale development of data centers, and as you know, with the advancements in AI, there continues to be increasing demand for data centers to house chips for the utilization of tools like ChatGPT. The second segment is transportation solutions, where it engages in construction and rehab of highways, and it's a direct beneficiary of the Jobs Act. If you've been on any highways recently, you know that there's a bunch of work that's there to be done to refurbish and fix highways that have been in existence for 70 or more years. And its last segment is the building solution segment, where it provides residential and commercial concrete foundation services. There's a huge shortage of housing for Americans, and it benefits from those tailwinds as well. Looking at its financial performance, it looks like its EPS doubled from 22 to 23, took a slight step back in 24, but looking at the macroeconomic environment, infrastructure spending will continue to increase as a result of the Jobs Act. With a surge in demand for data centers, we expect that segment will continue to grow grow for this business. And then we're in a tough interest rate environment right now, but that does not take away the demand that still exists for housing. And this business directly benefits from that. So in 2 out of its 3 segments have really strong tailwinds associated with them. In its fourth segment, as a result of interest rates, there might be a slight decline, but the housing market is going through a circular shift as more and more millennials decide to own homes versus rent. That segment will continue to grow. Its stock price performance has been very strong over the last 5 years. It's obviously been impacted recently by the volatility in the market, but the trend is strong. That doesn't mean that there are no risks. It's still exposed to the economic cycles and could be impacted by a recession. And any regulatory changes that occur could impact project execution. And it's dependent on large-scale projects, which might introduce revenue volatility, which could impact its cash flows. So why don't you write down in the comment, what do you think about this one? Was this a good stock pick by ChatGPT for us to do further diligence to decide if this is one that we might invest in? The next one that ChatGPT picked is a utility company, Duke Energy. It would make sense in the face of a potential recessionary environment that one of its stock picks would be one in the utility segment. So why Duke exactly? This is a company that serves 8.2 million customers for electricity and 1.6 million natural gas customers across the Southeast and Midwest of the United States. It operates in 3 segments: electrical utilities and infrastructure, gas utility infrastructure, and commercial renewables. From a financial perspective, for each of the last 3 years, it's grown its revenue from 25 to 28 and to $30 billion. Its earnings per share is up approximately 65% from 22 to 2024. It does have a significant amount of debt, with its debt to equity ratio above 1, but it also pays a dividend to its investors. It has a reasonable P/E ratio below the overall market. From a macro perspective, there are a few things that impact it. So the regulatory environment from state to state determines how it can set its prices. Interest rates determine what it costs to invest in infrastructure, and whether events across the country could cause significant damage to its capital installed equipment base. Though these are all things to watch for, the fact about it is that these services are consistently going to be needed regardless of price. And in many markets, services like Duke Energy are essentially monopolies, which means that they get to dictate the terms at which they partner with their customers. One of the challenges of the stock is that the company faces significant restoration costs, especially after hurricanes in its markets, and it's mainly based in the Southeast, which impacts how much it has to spend versus its competitors on infrastructure improvement. So let's talk about some of its risks. So it can be significantly impacted by what politicians decide about its pricing in the markets that it operates, and so that's something to be watchful of. When severe weather events occur, they are very expensive, and the company already has a significantly high debt to equity ratio, which is something that should be monitored carefully. All in all, if I were looking at this for myself, I think this could be a consistent dividend generator that sits in the portfolio to help smooth out the volatility in the current markets. So why don't you comment below? What do you think about Duke Energy as a potential stock to buy now? All right, this last pick is one of my favorite picks recently. It's one that's performed incredibly well in the last 2 recessions, in the 2008 recession and the 2020 recession, and it's got a lot of wind behind it right now, showing its ability to grow revenue and profit significantly regardless of the economic conditions. And that stock is Netflix. I guess it should make sense. It only costs $16 or $17 a month, and you get all the movies you might want to watch, all the TV shows you might want to watch. And when you compare it against its alternatives, like going to the movie theater or other entertainment options, it seems like such a steal. But let's evaluate it as investors. It's grown its revenue from $31 billion in 2022 to $40 billion in 2024. That's about a 25% increase in revenue, but its profit has almost doubled in that time frame. So it's grown its profitability at a faster rate than it's grown its revenue. Its free cash flow has tripled in that time frame. When we look at its valuation metrics, its price to earnings ratio is about 45, which is expensive to the market, but its price to earnings growth ratio is only 1.55, which indicates a business that's growing really fast. What are the macroeconomic considerations? Well, it's shown a lot of economic resilience recently. Like I mentioned, it did really well in the 2008 recession and also the 2020 recession. It's up 26% year to date, and the market is down in the same time frame. It continues to grow its business internationally, which gives it more diversification around the world. And it's added a new advertising revenue tier to its revenue base, which they believe will become a $9 billion business by 2030, which is only about 8 years from the time they started that business. So that's all the good stuff about Netflix. So how about some of its risks? It does face a lot of competition from companies like Disney and YouTube. There could be changes in other markets as to how it can win customers and how it can price its services. And it does depend on continuously creating content in order to win new customers. And content creation is very expensive. So what do you think about these stocks that AI picked? Did you learn something new about these opportunities that you otherwise would not have known if you did not use this tool? I found it to be incredibly helpful at gathering a bunch of information really quickly that would have taken me hours and hours to find. And that makes me a faster, smarter investor. So why don't you comment below and let me know what you think? And also you can watch this next video where I have AI pick its top recession stocks. Like and subscribe. I look forward to seeing you in the next video.